Welcome to ForexTV.com. It's Tuesday, March 11th. I'm Remy Huki for your New York Forex Market Buzz. The U.S. dollar has strengthened today after the Fed Reserve announced it will inject $200 billion into the financial system. In afternoon trade as of 1:15 p.m. Eastern Time, Euro dollar is at 1.5331. Sterling dollar is trading at 2.0059, while dollar yen is at 103.06. U.S. equities have rebounded in today's session, although off earlier highs. This afternoon, I'm joined by George Davis, Chief Technical Analyst at RBC Capital Markets. Good afternoon, George.
Good afternoon, Remy.
Thanks for joining us today.
My pleasure. Thanks for having me.
Well, earlier we saw Euro dollar hit another record high at 1.5494, helped by the stronger than expected ZEW survey. But the latest move by the Fed Reserve in coordination with other central banks did boost the U.S. dollar. And this lifeline by the Fed has lowered chances of more aggressive rate cuts in the U.S. But first, George, if you could tell us how effective you expect these measures to be in the long run.
Well, I think that's the big question, Remy. What we've tended to see in the past when we've had similar announcements come out from the Fed back a couple of months ago was that it only served to have a very short-term positive impact, and once that dissipated, we saw the markets revert back to their prior trends where equities remained under pressure, as did the U.S. dollar. So I think that's still a risk here. Obviously, I think it's a step in the right direction in the sense that it does hopefully help alleviate some liquidity and funding requirements that market participants might have. But again, I don't think it's going to be the final solution. So I think over a shorter term standpoint, it's probably going to be a positive for equities and the U.S. dollar. But over a more medium term to longer term standpoint, I think the overall trends that are favoring a decline in equities as well as the U.S. dollar are likely to remain in place.
So, George, while the hope does remain that the latest Fed move will ease credit market woes, let's talk about how this translates into price action for the major currency pairs. So, George, if you could tell us for euro dollar as well as for sterling dollar, what levels you'll be watching.
Sure. In terms of some of the key price levels right now, the technical trends for both the euro and the sterling against the U.S. dollar remain to the top side. And within those uptrends for the euro, we have support coming in at 151.86. So I'd expect to see some buying interest come in around the 152 area. And to the top side, we've got resistance now coming in at 155.37. For sterling, we've got downside support that comes in at 199.56. So I'd expect to see some buying interest come back into the market around the 199.50 area, and to the top side we've got resistance now that comes in at 202.28.
Okay, and let's move on to the low-yielding currencies. The Japanese yen as well as the Swiss franc have benefited from risk aversion as of late. But for dollar yen and the yen crosses, after the Fed's latest move, what is your forecast?
In terms of dollar yen, I think the risk is, at least over the short term, given the positive impact of the Fed's moves, we're likely to see dollar yen push a little bit further to the top side. But again, when we look at things from a medium term to longer term standpoint, the overall trend in dollar yen is still to the downside. So as a result of that, I think that we've got resistance that comes in at 104.18 and then around the 105.50 area, and I think that zone will attract medium to long term selling pressure in dollar yen. And to the downside now we have support at 100.82, and I think it's a matter of time before we go down and test that level to the downside. Now, when we look at the crosses, taking a look at euro yen, we've basically got a downside bias in place in euro yen as well. The overall trend in the equity markets remains to the downside, and that basically points towards increased risk aversion. And in that type of environment, the yen tends to benefit. So we've got support that comes in at 155.62 that we think will be tested over the next couple of weeks, and resistance right now comes in at 160.04. So we would expect to see some selling interest into the market around the 160 area. And for Aussie yen, we have support this week coming in at 92.87 and resistance at 97.54 with a downward bias in place there as well.
Okay, George, and last but not least, before we wrap it up for today's interview, since you mentioned Aussie yen, let's take a quick look at the dollar block currencies against the U.S. currency, starting with Aussie dollar as well as a dollar CAD. George, fundamentally and technically, if you could highlight the key drivers and levels for the currencies.
Sure. What we're looking at in the dollar block currencies, first and foremost, I think, is the performance in commodity markets. I think especially as it pertains to the Aussie dollar. We've had a nice bounce to the top side today for the Aussie. So I think that at least over the short term, as we trade throughout this week and into next week, I think we're likely to see a bit more of a push higher. We've got support that comes in at 91.09, so I think around the 91 area, we're likely to see buying interest for Aussie. And we've got some initial resistance that comes in at 93.23, followed by the 94.50 level. So we favor a move to the top side there. Same thing for dollar Canada. I think obviously commodities have been an important driver, but I still think there's a fairly tight linkage that's in place between equity markets and the Canadian dollar as well. When equity markets do well, the Canadian dollar has tended to benefit, and vice versa. Right now, I think dollar Canada, unfortunately, is trapped in a fairly neutral trading range. To the downside, we've got support at 97.24, and then to the top side of the trading range, we've got resistance at 98.84, or 99.84 rather, and I think we're going to have to see one of those two levels give away to get some further price direction. But I think over the short term, I think the risk is that we see the 99.84 level give way, and we're likely to see dollar Canada rally up towards the 100.85 level.
Okay, George, thank you very much for your insight and analysis this afternoon.
You're very welcome.
This has been your Forex Market Buzz with George Davis, Chief Technical Analyst at RBC Capital Markets. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.